What's going on, y'all? It's Big Facts again, coming at you with another video. As we all know, the U.S. economy has been taking a hit by the recent pandemic that has been going on throughout the world. And what's interesting is that through the crisis that has been going on, there's been a certain segment of the economy or a certain group of people in the economy that have actually fared quite well. And that is the ultra rich or ultra wealthy, whatever you guys want to call it, or the top 1%. You know, right here, as we're seeing, we're looking at Jeff Bezos, founder of Amazon, owner. Before this pandemic took off, his net worth was, as of March 12th, 2020, $100 million. Now, when $100 billion. Now, when the whole shelter-in-place order and everything took off, he amassed over $25 billion, shooting him up to approximately 125 billion US dollars in net worth. Now that's ridiculous, seeing that, 26 million Americans have lost their jobs. The global economy has slowed down significantly, yet he makes this amount of money. I mean, all the billionaires in the United States have amassed over $308 billion from all of this. They've came out on top of this. Now, a lot of people like to say, when people are fearful, that's when you like to be investing. But let's be real here. That is not the case here. We're going through a massive, massive pandemic where the United States economy essentially shut down. 70% of the U.S. economy is based on consumption. Now, retail jobs are not working. Manufacturing has slowed down because people can't necessarily go out and buy things, because they don't have the jobs. People don't understand the ramifications of all of this. And this is going to continue until a vaccine is discovered. This is going to continue. And it's sad to say that. And even people like Warren Buffett have spoke about people in his class like the Jeff Bezos, the Elon Musk of the world, They have all talked. Warren Buffett has spoke about how all these billionaires really taxes need to go up on them. The whole point of taxes is for income redistribution of wealth. But the income inequality this country is facing is going to be the next. It is going to be the next thing to throw this economy over. You're going to see social unrest unless these things get corrected. You're going to see this. Today, Facebook recently missed its earnings, yet their stock price is still going up. They missed it on their earnings call, but yet the stock price is still going up. The Federal Reserve has cut interest rates down to zero. They've said that they're going to keep it at zero. They're constantly buying back assets, doing asset repurchasing, propping up the whole economy. I mean, just pumping it with fake money, nothing to back it. The economy has slowed down. And I'm all for Keynesian economics. In terms of when an economy shuts down, then the government should, pump in money to get the economy going. But when people aren't working, when you have too many dollars chasing too few goods and services, then we're going to have inflation. People do not really see that asset prices are inflated. They should not be where they are all at. Even here, when you look at Market Watch, they're making warning signs that, look, after the coronavirus, the U.S. will never return to free market capitalism as we know it. This is a huge problem. Huge, huge problem. These are real GDP forecasts right here, where for the next 4 years, GDP is going to slow down significantly, especially if we do not get a vaccine, if we do not start doing massive testing, if people do not practice shelter in place. People have to understand that the stock market is not the economy. People are at the center of the economic universe. And if people are dying, people are sick, people can't go to work, people cannot purchase things, create goods, create services, then we have no economy. We will have no economy whatsoever, like we're facing right now. And just to give people an idea of what it really takes, to make this, to turn this around, it's going to take a massive overhaul on the way we do things in terms of our daily life, a massive overhaul in the political structure, the banking system. As we all know, the Federal Reserve, like I mentioned, cut interest rates to zero. But now the reserve requirements, there are no requirements for banks. Banks are not required to hold anything. They've been dropped down to zero. Reserve requirements have been dropped down to zero. So to think that your money is completely safe, that is false. That is why, and people don't realize, like, a lot of these billionaires have even foreseen this. That is why it's important that people are keeping cash on hand. And these billionaires have been seeing this since 2019. The next thing I'm going to show you. As you guys see right here, these are the asset allocations of high net worth individuals in North America as of 2019. Cash ranked number 1. Cash and cash equivalents. So the cash equivalents will be short-term bonds. As we all know, short-term bonds, because the yield had inverted, short-term bonds, these are like T-bills, maybe 3 months, 6 months, anything less than a year. They were producing higher interest rates. They were giving back higher rates than 10-year or 30-year bonds. So you see cash and cash equivalents are the highest. I mean, wasn't it Warren Buffett who was known to be holding $125 billion worth of cash at one point? So they all knew this was going to happen. Now, did they know about COVID-19 taking off the way it did? Maybe not so much, but they all knew a recession was looming. Cash is their highest. Before it was private equity. But now we see here that's cash, equity, this is stocks, fixed income, bonds, longer term bonds, a year or more, real estate, and alternative investments, commodities. And this is true because the commodity market is in the toilet. So why would they hold on to that? Oil, which was at negative price range at one point. So like the proof is in the pudding here. This is where the high net worth individuals are holding all their money. It's in cash. So that should tell you, middle income earners, lower income people, you have to try to hold as much cash as possible. You have to stay liquid in these times. And they're in these stocks. That's why you see tweets like Elon Musk telling that America must open up, because he's probably waiting for Tesla stock prices to shoot even higher, because that's where a lot of his wealth is probably in. But we're living in very, very, very scary times. A lot of the people, normal middle class Americans, have their wealth in their primary residence. You know, you see real estate taking quite a bit of a shocker in places like in the Northeast, like New York. So if people, if they're not working, they're not getting the cash. They obviously aren't buying homes. They obviously can't afford to put their money in stocks because they don't even have the cash to do so. You're seeing a huge imbalance in the U.S. economy. So forget about, after finding a vaccine, if people aren't being able to, having the ability to achieve the American dream, you're going to see civil and social unrest, all spurring from this COVID-19. But I want to hear what y'all have to say. Like, comment, subscribe down below. I'm out.